So how do you buy a home if you're a business owner and don't have the proper tax returns? I'll show you how in this video. What's up, you guys? Welcome back to my channel. Roger here with Vantage Realty and Vantage Home Loans, real estate broker, mortgage broker for over 12 years and specializing in helping first-time home buyers. So let's say you're a first-time home buyer and you are self-employed, you have your own business or anything of that sort. Basically, you're not a W-2 employee. So obviously the first option is you have to have 2 years of tax returns and the bank is going to go off your net income. So that can be a problem for a lot of people because a lot of business owners who are in their beginning stages of the business in the first 5 years have a lot of expenses and they have a lot of write-offs. So if you go to the bank and you say, hey, I want to get a loan, I brought in $200,000, $500,000, $1 million last year. The bank's gonna say, well, that's great that you brought in $1 million, but what did you net? So a lot of business owners, obviously one of the biggest advantages of being a business owner is having write-offs. You can write stuff off, not pay taxes on it. So young business owners, people who are early in their businesses, are usually going to have a lot of deductions. Now, if you don't have a lot of deductions, you have a high net income. If your net income's $100,000, that's $8,000 a month, and you've had that for 2 years, you're good to go. But let's say you don't have that, okay? That's where the bank statement loan comes in, okay? So the bank statement loan is a loan where they don't look at your tax returns at all. Okay, so they're only looking at how much are you depositing in your bank account, and it could be a business or personal. So if you're a sole proprietor, it could even be a personal bank account. How much are you depositing each month for the last 12 or 24 months? So if you've had deposits, good deposits for 24 months, then you're gonna get a better rate. You could do 12 months of bank statements, 12 months of deposits, but the rate's gonna be a little higher. So if you show you've been in business a little bit longer, 2 years instead of 1, you're gonna get a better rate. So what the bank is gonna do, they're gonna take your deposits over the last 12 or 24 months. For this example, let's just say 24 months, and they're going to average it. So if you deposit about, 20,000 a month, 30,000 a month, whatever that number is, they're gonna average that, they're gonna add all your deposits divided by 24. That's gonna be your gross income for the business. So let's just say your average deposits are 50,000 a month. So depending on what occupation you're in, the bank will then deduct expenses because they know every business is gonna have expenses, right? But depending on the type of business, the expenses could only be 10% or they could be 50%. Let me give you a quick example. Let's take one of my recent clients. He's a songwriter, right? That's his profession. He works with pretty big artists. He has a big following and he is, making good money off of Spotify and iTunes and all that good stuff, right? So he's bringing in, again, let's just use that example, 50,000 a month. Now, if you're a songwriter, and that's your business, and that's all you do all day, you're not gonna have a lot of it. What's your expenses? Pen and paper to write down your songs, right? So if you're bringing in 50,000, the bank will only deduct 10% for expenses. So any kind of creative people, let's say you're a painter, you're a songwriter, you're a musician, you are a filmmaker, you're a video editor, right? Like all of these kinds of professions don't have a lot of overhead. It's really just you putting your skills to work. I have clients who are graphic designers. So the bank's only gonna deduct 10%. So 50,000 is your average deposit minus 10%. 10% of 50,000 is 5,000. So 50,000 minus 5,000, that's 45,000. So the bank, even if you don't report any net income on your business tax returns, the bank's giving you credit for $45,000 a month. And that's exactly what is the case with my songwriter client, right? He's got like $100,000 a month coming into his bank account. So the bank's gonna give him credit for like $90,000 a month in income, okay? So that will allow you to buy a house now, because in the past, you had to have 2 years of net income on your tax returns. No questions asked. About a year or two before COVID, these bank statement loans started coming out. And then during COVID, it got shut down. Investors were like, we're not touching any business owners because obviously, business owners were greatly affected by COVID. But now that things are slowly opening up, the bank statement loans are back. Okay. So if you're any type of business owner and you have a hard time qualifying for a traditional loan because you don't have the tax returns, you don't have the net income, you could still buy a house with the bank statement loan. Now, what's the catch? Right? So there's always a catch. So here's the catch. The catch is rates are higher. Just simple as that. So right now, a traditional mortgage is around, 3%. A bank statement loan is going to be between 5 and 6%. Okay. So yes, the rates are higher, but if you don't have those tax returns and you can't buy a house in the next 6 months or a year, and you have to wait, now the house that you're going to buy is going to be much more expensive because in 2021, houses are projected to increase. Home values are projected to increase by 10%. So if you want to get into a house right now, right, so you can get this loan to get into a house and then you refinance later, right? So you get the house you want, the payments and the interest rate will be high for about 6 months or a year, but then you have to have an exit strategy. All right, I'm gonna file my taxes, I'm gonna show net income, I'm gonna not write a lot of stuff off, and then I'm gonna show net income, I'm gonna refinance and get back into a conventional loan and get the low rates. Okay, so bank statement loans, generally speaking, you don't wanna pay 5, 6%. In the long term, they're short-term loans, right? It's like a Band-Aid. Get you the house that you love, you're ready to buy, you have 100 grand a month coming in, you have your savings, you have a down payment, you have everything ready to go, you just don't have the tax returns. This is a great opportunity to utilize this program, suck up the higher rate for 6 months or a year, and then refinance, get out of it. But in the meantime, you get the house you love before the prices go even higher. That's about it. Very simple loan, very simple program. All you need to do is send me your 12 months of bank statements or 24 months of bank statements. I give it to the bank. They get back to me in 24 to 48 hours. They say, hey, we're giving Joe Smith $50,000 a month in income. 10% will go to expenses. We're giving him X amount of income, and then I get you pre-approved, you go house shopping. How does that sound? So that's basically the gist of the bank statement program, something to consider if you're a business owner. And again, thank you guys so much for watching. Coming out with 1 to 2 videos. I'm trying to get it up to 2 videos a week. Just bring you guys as much information as possible, loan programs, everything that's going on in the real estate and mortgage industry. So hit the subscribe button, hit the like button. Thank you guys so much for watching, and I'll see you next time. Bye.